Time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes. And I'm going to tell you, we only got 3 weeks till the beginning of the year, and if there's anybody that's going to help you, it's us, and we're in your corner, and that's what it's all about. And it's kind of lean pickings today because Christopher went and took his daughter to some kind of a track meet in Amish country.
Soccer.
And so it's just, pardon me?
It was soccer.
Oh, soccer. That's it, soccer. And so it's just Tiffany, Fabian, and I. Hey, Tiff.
Hey there, Esther. Nice to talk to you, and we'll give good advice today. Hopefully.
That's right.
Yeah.
Okay, so what we want to talk about is, first of all, with tax season just 3 weeks away, officially the IRS isn't going to open up until January the 20th. That's the first day of electronic filing. So even though you might be getting your W-2s and everything together, the first day of electronic filing is until January the 20th. This year, EG Tax has 3 new offices. We have a brand new office on Grand Island, one in Wellsville, and one in Medina.
That's right.
For the people up north, the people in the middle, and people down south. So that's good. And then if you need any tax questions answered, you can always go to our website at egtax.com. And then next week, of course, for all of you that are just completely perplexed by the Affordable Health Care Act and you just don't know what to do, we have our very own soon-to-be navigator, Tim, that's going to join us in studio next week and going to talk about the Affordable Health Care Act, who gets what if you don't have it, what if you don't think you can afford it, what if you don't have any money, da-da-da-da-da-da, right, Tiffany?
That's right, and we're very excited. There's like 3 tests, and Tim has passed all the tests to be a navigator. We're just waiting for him to get his certificate in the mail, but very pleased to say we have our very own navigator on staff. So, yes.
And the other thing is we are one of the very few places where if you're a tax professional and you would like to do the voluntary income tax compliance exam, we offer that through EG Tax, correct?
Yeah, absolutely. We do. It is the annual federal tax return preparer class. And it's really exciting when I'm in the office and I get calls from people in New Jersey and in North Carolina. And they said, I went onto the IRS site and I see that you're an official AFTR provider. And so they get to take the class and then they'll be registered as an AFTR. It's a completely voluntary program, but it's something to brush up on your classes, your knowledge of taxes, and you get the 6 CPEs. So it's a great opportunity.
Important. I mean, I would think that anybody that is using somebody to assist them with their income taxes would want somebody that can pass an exam,
yep,
right?
Absolutely.
I mean, that would be pretty important. You certainly don't want Aunt Thelma, who can just do her own tax returns, to do your tax return. You want to make sure that you're dealing with somebody that's compliant. And obviously, with New York State is moving to that licensure part too. So that's the other thing, but we're real proud of that.
Yeah.
So if you're a tax professional who listens to Ask the Tax Lady and you would like to become certified, you can go to our website at egtax.com and enroll online, and we'll get you certified so that you can be a voluntary licensed tax preparer, and I think that's something to toot your horn about.
Yeah, absolutely. I teach the tax class, and the students are like, oh, my God, I can't believe how complicated this stuff is. And it really is. And so just like you said, you don't want anybody doing your return. It's really critical that you have the right person.
And of course, this year with the Affordable Health Care Act, better known as Obamacare, we're the people that are making sure that you're in compliance, and we're the people that are going to get the refund if you have a refund coming because you paid your own health insurance and you're entitled to a subsidy and you didn't get it. We're the people that have to make sure the subsidies that you got were correct, and maybe you're going to have to pay back some. We're the people that are going to have to figure out if you qualify for any of the exceptions to penalty, and that's why you want to make sure, because if you make a mistake, looking at the penalty, it could cost you $300 or $400 or $500 or more.
Right, and every year the penalty goes up.
And this year going up.
Right.
If you're somebody that can get out of the penalty, that's a great thing. The other thing is we don't charge at all to help you to sign up for Obamacare.
That's correct.
With the New York State. What is that called?
NewYorkState.gov, Healthy New York.
The Healthy New York
website.
So, not Healthy New York.
No.
New York State of Health.
Right.
New York State of Health.
Because
because we are actually responsible for people with their health insurance, and that's what the tax industry is doing.
I was
now.
talking to somebody. Isn't that what they're taking to Supreme Court right now? Is that there's some states that didn't have their own certified navigating system on the website, so they're taking it to the Supreme Court and saying it was unconstitutional or something like that.
That's true.
Yeah.
That's true. It is not a popular bill at all. But if you're somebody that's getting it for free, it's very popular with you.
Right.
It may not be popular with the taxpayers, but it's very popular if you're getting it for free. The other thing is, many people have called and said, "Can I switch over up to $100,000 from my IRA to my charity?" The tax extender bill that extends the extensions for the tax laws that had closed up last year that they extended. He has already passed the House of Representatives, went to the Senate, and I really expect by Monday it's going to be passed. So it looks like the tax extenders that will reinstate the deduction for sales taxes, people called about that, for if you're a teacher and your educator expenses, for the tuition and fees deduction, for all those things, for the MIP, all those things that had expired. Looks like it's going to be back in business. We'll know officially next Saturday, and we'll let you know. But I would, if I was a betting lady, and I'm not, but if I were a betting lady, I'd say probably it's going to happen.
So they're going to make us wait like they do every year.
That's true, because they can't get along.
Right.
They can't get along.
Absolutely.
Like many people, right? So, all right, I'm Esther Gulius, the tax lady. We're going to take a short break. We're going to be back on the other side with your calls. 8030930, 8030930, star 930 on a cell phone. We want to help you. We're going to talk about the last 3 weeks before tax season, RMDs, deductions, pensions, extenders, get ready for Obamacare, and all of it, and your calls. I know that one, Brenda Lee. Do I win? What do I win?
Winner.
I win.
Dinner.
I mean, after 18 weeks, I finally got one. Anyway, Merry Christmas to everybody. Happy Hanukkah. This is such a wonderful time of year. It is. Makes my bank account go broke. But aside from that, I love my family, and I'm so thankful for everything. I just am thankful for family. I'm thankful for my business and my clients.
During the office this week, we had Tony filling in for prepare questions and help. And I said, Tony, are you ready for Christmas? He says, I'm thinking about it a lot, but the bank account thing is just sort of getting in the way. So he says, I'm thinking about it.
The other day I sat down at my computer and I thought, okay, I made my big list. I got up at 4 o'clock in the morning, did my big list. And by 10 o'clock, I had the list fulfilled except for 2 people, and I know you think you know who that is. Okay, let's go to, we're going to talk, I'm going to talk about taxes in between our questions, but Justin from Grand Island's been holding for a while. Hey, Justin, how can we help you?
Hey, Esther, how you doing?
Good.
Hey, so I got a job offer to move within the company to Pennsylvania. Now, we bought our house September of last year, and it was a foreclosure, and we're going to probably have a pretty big capital gain.
Good for you.
I have until May to leave. Obviously, my wife's going to stick behind until the kids finish school, and then part of the summer till the house sells. Now, I know with the 2 out of 5 years capital gains, as long as it's your primary residence, you don't get hit with that.
Well, see, you know enough to make you dangerous. It is true that the capital gain is forgiven up to the first $500,000 on a joint return if you own the home 2 out of the last 5 years. But you also can exclude by the number of months prior to sale if the move or the reason you left your personal home was due to no fault of your own, and a job transfer is one of them. So if, let's say that you, at the end, by the time your house is sold, let's say 15 out of 24 months are gone, then you get to take 15/24 of 500,000 as an exclusion.
That's fantastic.
Okay?
Yeah, that actually is good news.
Well, that's a good Christmas present from us to you.
And don't forget, Justin, that there's a moving credit for a job if the employer doesn't pay much of when your move is, and you have to stay at that employer, I think, for a year and a half afterwards. But there's also a moving adjustment to income credit. So don't.
Are they going to pay for your move or not, Justin?
Yeah, that was my next question, actually. They are hiring a contractor for me. Now, will I have to claim that as income?
No, you're not going to have to claim that as income. And actually, your temporary living expenses are not deductible. The moving expenses, if they should pay temporary living expenses, it's not deductible. So it'll be in your W-2. The actual cost of the mover, the boxes, the shut-off fees, and all that stuff is all going to go into the moving expense. So if all they pay is the contractor to move you, the other stuff is still deductible on a 3903.
Great.
Okay? We're going to miss you, Justin. What part of Pennsylvania?
It's actually York, which is kind of by Philly, Baltimore area.
Well, that's cool. Philadelphia is a really great place. I
great.
went to Philadelphia for many years. It's a great place. Well, we're going to miss you, and you can still listen to WBEN. We stream live, so listen to Ask the Tax Lady. We'll miss you. We'll miss you.
And Merry Christmas.
Yeah.
You as well.
Thank you. Okay, let's see. I want to talk about, before we go to some of our other calls here, last 3 weeks before Christmas, please, if you're over the age of 70 and a half, take your required minimum distribution. Call the financial institution that keeps your IRA or your annuity and tell them you need to take your RMD. And because the penalty for failure to take it is 50% of what you don't take. So if you're supposed to take $10,000, the penalty's $5,000. That is a big thing.
And then don't forget, if it's your first year turning 70 and a half, you have until April 1st of the following year, but that year you must take 2 distributions.
That's right. You have to double dip if
but
you
just
wait
a
till
little
next year.
caveat. Yep.
Right?
Yep.
And then the other thing is all your deductions. If you're somebody that itemizes, make sure you get those deductions in, whether they're medical, property taxes that you owe, charities. That's, a really big thing. This time of year, I know that's when I do my final charitable contributions. Though that's, clean out your closet, get ready for the new junk coming from everybody under the tree. So you can put the old junk and give it away. Make sure you keep a really good list and pictures of what you're giving so you can prove it.
Right.
So they have room for the new junk.
And one of my clients called me the other day, and he said his wife gets mileage from her company, but it's only 22 cents. So he's thinking of foregoing it and taking the government rate. I says, oh, no, unfortunately, you can't do that. If your employer entitles you to a mileage deduction, you must take that, and you can't pick which one is better. And then the difference.
Right, but then he gets the difference between the two. And you'll notice that the IRS yesterday changed the mileage reimbursement down because the gas prices are coming down.
Right.
Which is such a great thing. The other thing is, I wanted to make sure I tell people is that we're going to be simulcasting in Florida.
Right.
So if you're somebody that's in the Naples, Florida area, we're going to be in Naples, Florida, all during tax season on Ask the Tax Lady. So you're going to hear people asking about palm trees,
right?
Not just snowdrifts, right?
That's right. No deducting of snow blowers or things like that.
That's right.
Chris said
I just want to know, can I deduct my snow blower? Not really. Okay, let's go to Larry in Georgia. That's my Georgia peach. Hey, Larry, how y'all doing?
Well, hey, darling. Donnie speaking to your biggest fan in Georgia, of course. Georgia, Esther, I've got a couple of fast questions, so I'll go quickly. One,
yeah.
Brindley is wonderful. She has cute songs. Two, on the song.
Rocking around the Christmas tree.
Yeah, very cute, very cute. But Esther, of course, you're just way too young to have been around when she was. You're way too young for that.
Unfortunately not, but okay.
Okay. Esther, on the volunteer program, I mentioned that. I wonder later on, can you tell us if you can do that online? If not, it's okay, but if you can, be great.
The volunteer program.
What are you talking about, Larry? I'm missing what you're saying.
I'm sorry, Esther. I was talking about the tax program, assisting people. And
you mean the VITA?
VITA, yes.
Yeah. Okay.
And I just wonder, can one take the training program online?
Oh, he's talking about our AFTR program.
Yeah.
AFTR.
Yeah, do we have it online, right, Tiffany?
Yep, absolutely. Just go to EG Tax or call our office number, and it's all online. It's self-study, and then there's 100-question test that you have to take afterwards, and that's also done online, and it's a timed 3-hour test, and it's all pretty cool, but it is all done online.
We gave it to the IRS lady the other day, and she got, 98?
Yep, because we had to have somebody audit it. The IRS lady got a 98.
That was pretty good.
Yeah,
wow.
but I gotta say that she knew the questions beforehand, but whatever. That's very good. Very good.
Okay. Esther, a couple of tax questions. One, recently I did a contracting job in Georgia for a client who's in Nevada, and long story short, he stiffed me. So I'm in the process right now of filing for mechanicsm of his property and possibly suing him in small claims court. I wonder, the expense of the legal action, is that all deductible? And
Yeah, it is. It is. As long as it's ordinary and necessary, And when you take them to a small claims court, the cost of the court fees, the filing fees, the attorney, that'll all be deductible. And if it's large enough lawsuit, your expense to get there would also be deductible. And your hotel and meals. So yeah,
would go under legal and
because
professional.
remember, when you do settle the suit, then it's going to be income to you.
Got it. Esther, can I ask another fast question?
Yeah.
Okay, good deal. I have a SEP IRA that I've had a couple of years. It's got about $30,000 in it. My original plan was to roll it over into a Roth IRA for 3 years at a time, $10,000 a year. This year, because of my investment repositioning, I'm going to have a very large capital gain hit. I'm working part time, so I have some earned income. I wonder, at what point is it prudent to do that rollover? Should I wait? Should I do it now, or should I wait? What do you think about that?
Well, it really comes down to your total income, Larry, and your tax bracket, and really your assets. I don't know what you'll look like when you're finally retired, but and you may find that the first $11,000 of income is going to be tax-free. So you have to say, what benefit will it do me to roll over from a Roth to a traditional? So what I'd like to do is maybe look at all your figures so we can make a plan, because you want to make sure that you know what you're doing and you're not just costing yourself a bunch of extra taxes.
Yeah.
So call us Monday. You know where we are. We'll be very happy to help you.
I will, Esther. Thank you so much.
Thank you, Larry. Have a great day. Merry Christmas if I don't talk to you.
I want to give the numbers again. If you call in with a question, it's 803-0930, star 930, or 1-800-616-9236.
Okay, and then I wanted to also talk about, before we get to the news, Obamacare. This is open enrollment, right?
Right.
And you want to make sure that all your dependents, all the people that are living in your house, if they're over the age of 26, they have health insurance, and you can go right on our website at egtax.com and click on the part about We Know Obamacare, and there's a form for you to fill out to see exactly how much health insurance is going to cost you. And many of you, or you may think, even though in the past you've had to pay your own, you're going to find many people have subsidies, substantial subsidies, so which means the federal government is paying for it. So you want to make sure that you use that subsidies. And of course, like I said, next week Tim is going to be on the show, and he's somebody you can see. But before then, you can stop in and there's no charge. Correct, Tim?
That's right. It's so cool. I've been driving around too, and a little side note, I'll see bulletin boards for Health Republic, and I'm like, I know that insurance company. That's one of the ones that are offered on the site. And so I've heard good things about Health Republic. And so,
well, Health Republic is the lowest cost health insurance company. It's one that just came into New York State last year,
right?
With the
Affordable
with the
Care
marketplace,
Act. Right.
and many people like it, and it's much less expensive. But it's here. Obamacare is here, and we certainly want to help you. The other thing I want to talk about just before the news, I'm going to talk about gifting. Make sure if you're somebody that's like grandma and grandpa want to start liquidating their estate, you can give to each person per year without filing a gift tax return $14,000. You could make somebody very happy
Right.
this Christmas time by giving $14,000, and it's not deductible to them, not taxable to you. You don't have to do a gift tax return, but many people are looking for that help as well. I'm Esther Gulius, the tax lady. We're going to break for the news. We'll see you on the other side.
It's the most wonderful time of the
Okay, so you really are reaching all the way back, right? Right,
What is that,
Tyler?
Bing?
All the way
Is that
back
Bing
to the
Crosby?
20s. No, that's not Bing Crosby. Oh, cripe. Is that Gene?
No.
No. Who is it? Okay.
Andy Williams.
Andy Williams, that's right. That's even before my time. More or less.
You
More
know,
or less.
before-
I guess it's a little less and more.
Hey, Esther, before we get off the topic of gift, I just got to throw in, last week, one of my friends called me. She's a nurse practitioner, and she says, Tiffany, I've been giving my dad, gifting him like $5,000 a year because he's in Africa and he needs the money. Is that a write-off? And I said, no. She goes, it's not. I go, no, not unless he's a 501c3 and U.S. corp.
Well, but if she's supporting him.
Right, I thought about
50%
that.
of his total
I
support.
thought
As a
about
matter of
that.
fact, somebody called me yesterday and said that he had been supporting his mom,
Right.
who's in a nursing home for the last 8 years. And he's paying like $30,000 a year to keep her in a nursing home, and the firm that's been doing his return has never taken the mom as a dependent, nor have they taken the itemized deduction for the nursing home expense.
Oh, my God.
So I said, I think you need to come in because I think you got like $15,000 coming
Right,
back.
right. I mentioned to her the dependency, and she says she's going to have to keep that in mind because he's got a lot of medical problems. So something to think
the thing
about.
Is he'd have to be a citizen or U.S. He'd have to be a resident or U.S. citizen.
Right.
Well, I'm Esther Gulius, a tax lady from EG Tax. I'm joined in studio with Tiffany Fabian. Her husband's out doing soccer practice with his daughter, so she's not here. But we're here, and we want to hear what you have to say. 803-0930, 803-0930, star 930. And Rich has been so patient. Rich on line 3, how can we help you?
Hello, Esther.
Hey, sir, how can we help you?
Yes, Merry Christmas.
Merry Christmas to you.
Okay, and Tiffany also.
Thank
Yes,
you.
You're welcome.
Well, maybe we're not supposed to say Merry Christmas on air. I don't know. To me, it's Merry Christmas. That's the federal holiday, and
That's right.
It's Merry
Let them
Christmas.
try to stop me. That's
All
all
right.
I got to say. No, but anyway, I'm the executor for my mother's estate,
Okay.
and we're in the process of selling her house. And my sister who's on the deed, lives out of state. She lives in Illinois, and the lawyer feels there may be a New York State tax consequence to my sister because she lives out of state. Mm-hmm. And I was just wondering if you could help me with that.
Well, I mean, I'm assuming Mom and Dad had gifted you the house prior to their death,
Or was
correct?
it inherited?
Right?
It
was gifted.
It was in a living trust, and
Okay,
so
and
it
the
came
and the
back to us,
title
yeah.
was changed to you and your sister, correct?
Correct.
Okay. So then would you have to go back and compute is what Mom and Dad paid for the house? When did Dad pass away?
About 10 years ago.
Okay. So and then you guys got the house upon his death, correct?
Well, upon my mother's death, no. It
Okay,
was,
but she had gifted you the house on a life estate after Dad passed?
No, we had a life estate prior to my father passing.
Okay.
And so
this all right, this is
then my
what you
father
guys
passed, and then my mother stayed at the house, and then my mother passed this
Okay, so
year.
you need to figure out what Mom and Dad paid for the house, plus improvements, plus expense to purchase, plus expenses of sale, plus any improvements that were made over the years. So let's say that they paid $25,000 and they put $15,000 in improvements. That would bring the basis up to 40, and let's say it costs you $7,000 to sell it, so that's 47. And what did you sell it for?
We sold it for around $65,000.
All right, so the difference between the adjusted basis and what you sell it for is what's going to be taxable, depending upon your tax bracket. Now, if you and your sister's tax bracket are under 15%, you're going to split this. Is there only 2 heirs, you and your sister?
No, there's actually 5 of us, but only one lives out of state. And that,
Okay, so each one of you are going to take a small piece of the gain, put it on your tax return. Your sister, who has a small piece of the gain, is going to have to file a New York State tax return, but it sounds like it's going to be so small that she may not even owe any New York State taxes.
But that's why the lawyer wants her to have some backup withholding for the state in the case that she did.
They're gonna do that, but she'll get it back.
She'll get it back. Right.
So it's going to be a pain in the keister to your sister, but she'll get the money back, probably, if not all of it, most of it.
She'll have to do a non-resident New York return for the year.
But as far as the other 4 of us, there's no tax consequence.
Oh no,
at this
you
point?
guys are all having tax consequences. It's going to be it's
on
going to
the
be
federal
on a
and the
Schedule D,
state.
But if you're in the 15% bracket or less, it'll be 0% that you're going to pay. On the federal, you're going to pay New York State 6 or 7 or 8%, depending upon how much your income is, but it's not going to be a lot of money because the gain. You know, when you take a look at a house that is selling for $85,000 divided by 5 people with a cost basis, the gain is going to be very small per person.
And don't forget
let's just say it's $10,000 per person, and you're all in the 15% bracket. It's going to cost you nothing on the federal. It's probably going to cost you $600 or $700 on New York State. So that's not a lot of money.
I see. And now, during the time they lived there, 2 roofs were put on it because we just put one on recently in order to sell the house. Is that part of
it? It would be
the
last roof that's put on because that would be the one that
okay.
is with the house. So you got the cost of the house plus the land plus you got to walk through the house mentally. Did we do a new electrical system? Did we put in new kitchen?
Yeah.
Did we redo the bathroom? Did we redo the basement? Did we do the landscaping? Was there a new garage? Was there a new driveway? How about a fence? So you have to come up with the adjusted basis, and then from that is going to be what you sold it and divided by 5, and that's it.
And don't forget to deduct the lawyer fees and the real estate commission and things like that too.
Sure.
To help you out.
Okay, I just thought as an inheritance it would be tax-free.
But it's not an inheritance. See, when Mom gifted you the property prior to
And
her
the
death,
living.
when she did a living trust, it's like a yin-yang. It's great because it protects it against a nursing home. The yang is you do pay the income taxes.
Okay, so that's not considered an inheritance then?
Nope. It's when it comes through the estate that it's an inheritance. Then you would have gotten a stepped-up basis, and you wouldn't have to deal with that now.
Well, it is what it is, huh?
It is what it is.
Well, thank you. You got a great
All right,
program.
Merry Christmas. Thanks for calling.
You're welcome. Merry Christmas.
All right. All right, and we got Dave from Rochester.
Right.
Hey, Dave, how can we help you?
Hello.
Hey, Dave, how can we help you?
Oh, good. I'd like to thank I had Tim help me with my health care, and
Oh, that's so great. He's a great guy, isn't he?
yeah, he saved me over about $500 a year, so it was quite
Yay. That's what we like to hear.
Oh yeah, what I have some Series E bonds that are matured that my parents gave me,
Okay.
and when I cashed them in, I was wondering, is the full value taxable or is it just the interest?
Just the interest.
Just the interest.
And it's only taxable on the federal and not the state, because on the state of New York, any federal obligations is an exclusion to income, so you take that as a subtraction. But on the federal, it's fully taxable.
Okay, thank you very much.
You're very welcome. Thanks for waiting.
Have a nice Christmas. Okay.
Thank you very much. I'm Esther Goulias, the tax lady from EG Tax. 803-0930 is our phone number here in studio. Star 930 on a cell phone. Love to hear what you have to say. We're going to go back to some things that you should think about. We got 3 weeks before Christmas. One of the things I wrote down is Christmas pressures. it's a wonderful thing to be a generous person, but if you can't afford to be generous and you're looking at taking money out of your pension plan so you can fund your Christmas gifts, it's really not a very good idea, because especially if you're under the age of 59 and a half, you're going to pay a 10% penalty and plus income taxes, state and federal. So what you might want to consider doing is, if you absolutely need the money to pay for Christmas gifts, is to borrow against your 401k plan at work. You have to pay yourself back within 5 years, and then the interest goes back to you in your 401k plan, and it won't be taxable because borrowed money is not taxable. But what we suggest, Tiff, is always to change your W-4 at work, right?
Right, absolutely, because it's better to have more in your paycheck and extra money every week. More in your paycheck, extra money every week, and a little less withholding, so you get your money now instead of the end of the year and waiting for the IRS. I just helped somebody the other day who she filed in February, and still she doesn't have a refund. And
it's true. And I'm going to tell you, many people who desperately need their money are waiting for the federal government or state of New York to give it to them.
So I did a 911.
Change your 2105 on the state of New York so that they don't have your money. And this is what a great time of year to do that. Just go down to the payroll department, have them stop withholding or reduce the withholding so you have some money to buy your Christmas
And then
gift.
Another good idea, Esther, I think you and I were talking about this, is so if you're in a tough spot, don't take the money from your pension. Maybe tell your loved ones, I'm in a tough spot this year. And so it's a yin and yang. And so they maybe won't give you gifts and you won't give them gifts. And so just give little gifts, you know?
That's right. Just say, look, I'm broke. I'm going to make you cookies. You make me a scarf.
Right.
and just enjoy each other this time of year.
Right.
Instead of going into debt and needing your tax refund so desperately. But if you're somebody who's going to do it, look for a 0% credit card. You can go online, Google 0% credit card, apply, and usually there's a lower gross limit. In other words, they might only say you can spend $1,000 with 0% interest. But put your charge cards on that. It gives you a time to pay them off, and you can wait for your tax refund to do this. Use your home equity credit line, which is a very low interest rate, is tax deductible, and that's another thing. In other words, try not to use your pension.
That's right.
Try not to.
Because Esther will jump on her desk and say, please
It
don't.
breaks my heart because I hate to see people lose like 40% of the asset value in their pension because they just did.
My friend I was talking about, who gave her father money in Africa, she took the money out of her pension, and she's under the age of 59 and a half, and so she's very sad, and she makes a lot of money, so she's not going to be happy.
All right, we're going to break for a short break. We're going to see you on the other side, 8030930, 8030930, star 930 on your cell phone. Love to hear from you. We'll see you on the other side. Burl Ives, am I right?
Yes.
Yeah, baby.
Burl Ives, have a holly jolly Christmas.
Is he jolly? So he's a jolly guy?
He's dead now. I know he's dead. But
jolly, pushing
right?
up
Isn't
daisies.
he a dead jolly guy?
Pushing up daisies.
Anyway, Mr. Gullius, the tax lady, 8030930, 8030930, star 930 on his cell phone. The other thing I wanted to talk about is, what a great, grandparents, and I'm a grandparent. I have a really hard time with my grandchildren, what to give them. But if you're a grandparent, opening a 529 plan for their college education is a great thing.
Up to
because
$10,000
it builds
a year.
up the amount of money. Now, the grandkids are going to hate you, but I mean, that's beside the point. They're going to hate you now until they need you in college. But a 529 plan is tax deductible to you on New York State, and it builds up asset value so that the kids have money for college. So think about that too. That's another wonderful Christmas.
Up to $5,000 a year for a single person, and up to $10,000 a year for a married couple.
That's right. And so that's a wonderful thing.
Yeah.
And then the other thing I suggest this time of year, do a budget. I mean, don't spend what you can't afford.
Yep.
Otherwise, get in that kitchen and start making those Christmas cookies and give it to everybody. Okay, let's go back to the phones. I think we have Gordon, right?
Right. Gordon on line 2.
Hey, Gordon, how can we help you?
I have a question. the Part B medical that's deducted from Social Security, is that a legal medical expense on your income tax?
Sure.
Yep.
It is.
If you're an itemizing taxpayer for medical, then your Part B is deductible as a medical expense.
One other question. If I have a 401k or 403b with one custodian and I want to transfer it to another one, is there any limit on the amount of fees they can charge me for doing that?
That's where you have to be really a prudent investor. Make sure you look at what your company has you set up in, because that's one of the biggest problems that people have when you have given your money over to somebody that's managing the fund. They can charge you a lot of fees. The IRS does not regulate that. That's absolutely between you, the company managing your portfolio, and what you need to do is yell at the company and have them change who's doing the management of your funds.
And ask the questions in advance before you do that.
Okay, Gordon?
All right, thank you.
Did you get your
have no
Christmas
funds.
shopping
It's just,
done?
One of those, it's just an account that earns interest. That's all they are. And,
well, then they shouldn't be charging you much, I'll tell you, that's for sure. I
have
mean,
one that's charging me an unbelievable amount for
well,
that.
then you need to talk to your employer because they're also charging them. You got to understand that if you're in the fund, they're in the fund, and they're also charging your boss. So maybe your boss is just not good at finance.
Yeah, maybe. Okay, well,
Maybe.
thanks very much.
Thank you, sir. Merry Christmas.
Yeah, same to you.
Bye-bye. Okay, and we have Mary from Williamsville on the phone. Hi, Mary. How can we help you? Oh, Mary is not in Williamsville anymore. And how about Mick?
In line 1, Williamsville.
Yes.
Hey,
Mick. Mick is gone too?
Mick, are you there?
Do you mean Mike?
Mike, yeah, that says Mike on my screen.
Mike. Yes. Hey, Mike, how you doing?
Good. I have a question for you. I'm settling a lawsuit this year, and originally I was told I wouldn't have to pay taxes on it. It's a tort in New York, and it turns out that I'm going to have to pay taxes, and it's going to be probably about $50,000. And I'm wondering if I should split it up and take $25,000 this year, and then have them pay me $25,000 next year.
Well, I mean, it doesn't. This is the benefit. Assuming you're still going to be in the same tax bracket, it's going to be the same amount of money. The difference is you have 2 years to pay it. So if you owe $6,000 this year, and you would have, if you take the whole thing, owe $12,000, you get 6 and 6, so it gives you an extra. So if they wrote you the check December 31st and then January the 1st, you get an extra 12 months to pay the piper.
Okay, but it's going to be the same exact.
Well, assuming unless your tax bracket really, really is changing. Remember, only the excess over your tax bracket that it moves up is going to be at the higher rate. So if you're moving from 25 to 28, it's an extra 3%. But if you want to call us at 632-7886 Monday, we'll be very happy to take a look at what your tax bracket is so we can tell you exactly the difference, okay?
Great. Thank you very much.
Thank you, sir. I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And I want to talk about a couple other things you might want to think about before the end of the year. Sell your losing stocks to offset gainers. I know Friday was a bad day on the market, but many people have made a lot of money in the market this year. If you don't know how to read your statement, at least call your broker and say, hey, Jack, what do I look like as far as capital gains and dividends this year? And look at selling some of your losers if you have some, because that'll offset, you can offset dollar for dollar your losers against your winners. So it's something you might want to think about. And in 31 days, you could buy that same stock back and still take the loss. So think about that. The other thing is I put down here, make your New Year's resolutions now before you spend money. If you haven't gone Christmas shopping and your New Year's resolution is not to spend so much money, then don't.
That's right.
I mean, just don't.
You know what? You should be talking to me. It's so funny. I was talking to Tony, and my husband overheard me. I said, my problem is I go too big. And my husband started laughing because he knows I go too...
you're a maniac.
I know. I know.
But, I mean, you're not buying love. People love you no matter what.
Right.
And actually, especially when it comes to you, you're ridiculous. So you should really stop it.
Right. Stop it.
You should really stop
You're
it.
preaching to the choir.
Again, preaching to the choir. All right. And then, let's see, dependency issues. Oh, if you're somebody that's just recently got a divorce, talk to your former spouse now, because it's the best time to settle everything before tax time. Once it's tax time, people can really be very hardened, and it's not a good time to negotiate about who claims the child.
Yeah.
And I will tell you, it's the custodial parent that claims the child.
Yeah.
So, okay, let's go back to the phones. And we got line 2 is Carol, right?
Yep.
Hey, Carol.
Yes, hi, how are you today?
Good. What can we help you with?
Okay, I was wondering if there's any stipulations on taking a certain amount out of a regular IRA, and I guess the word might be roll over to a Roth. Now,
Okay.
so
rolling over to a Roth, you understand, if you take it out of traditional and move it to a Roth, all of it's taxable.
Even if I say
all of it is taxable.
Okay, here's my
Even
question.
if-
Though. What I generally see, my only income is Social Security, which is about $88,800 a year. So what I do is I usually take out about $6,000 out of my IRA for cash. But I thought rather than doing that, I would take that $6,000 and roll it over to a
Okay,
Roth.
so that's really good, wise tax planning, because all of it is taxable. But in your case, your personal exemptions and standard deductions put you about to $11,000. Since none of your Social Security is going to be taxable, you actually can roll over money from. And you're not 70, right?
No.
But my question, Esther, is this what her retirement is going to be like? Just Social Security? Why
That's
even?
what it sounds like.
Why even roll it over and make it a Roth?
Well,
then?
and that's true. I mean, why do you want to put it in a Roth?
Well, the reason my thinking was, if I die early, then my daughter would get that the Roth tax-free versus the IRA, where she would have to start taking the required distribution.
Okay, that is true from your daughter's perspective. That's correct. So you can roll over like up to $11,000 this year, and it'll still be tax-free. So that's a very wise decision.
Yeah, that's what I thought. Now, the other thing is, what happens after I'm 70 and a half? Could I take out, like if my minimum required distribution is only amounts to maybe $4,000, could I take that additional and roll it over?
And roll it right over. Yep.
Okay, I think I'll start doing that maneuver.
Atta girl. That's a very smart lady.
Okay, thank you very much.
Thank you, dear. Merry Christmas. Okay, Diane.
From West Seneca.
Hey, Diane.
Yes, hi. Well, Merry Christmas.
Thank you. Merry Christmas to you.
My mom, she's elderly. She still owns her own home, still, lives in it, pays all the bills, except I pay the taxes on the house for her.
Okay.
And I've been doing this for about the last 5 years. It's just that she just can't afford to pay the taxes on the house anymore. Is there any way I can get a tax deduction at all?
Only if you become a owner of the house. So all you have to do is put your name on the title. Then when you pay the taxes, it is deductible to you.
Really? Okay.
Yep.
So even though she hit the current deed right now, just have my name added on there.
That's right. But now here's the thing. Make sure that you're not going to lose that senior exclusion because you're now on the title. So before you change it, make sure that you're not going to lose, you're going to get the tax deduction, but you're going to lose the exemption for the STAR program.
Oh, but I am 65, so.
But it's not your home.
Actually, I'm
but it's not
64.
your home.
Oh, so we
So
would lose
check with the
STAR
city
thing?
that if you become a part owner, that your mother doesn't lose the STAR exemption.
Oh, well, then I don't want to do that. because-
Well, but check with the city.
Because it's only part owners. You're going to be part.
Okay. All right.
All right.
I see
Thank
what
you,
you're saying.
Diane.
All right. Thank you. Okay.
All right.
bye-bye.
And then we got Wade. Wade from Cheektowaga. Hello, Wade.
Hi, how are you?
Good.
Great. My question is, I moved to New York State in May from Texas, and I sold a house. It wasn't my primary residence in Texas.
Uh-huh.
Am I going to be, is New York State going to...
No. Okay, wait. I know y'all in New York State now, but the federal government says if you lived in your former house 2 out of the last 5 years, which you did, right?
He said it wasn't his primary resident. I'm confused by that.
It was not your primary residence in Texas?
No.
So what kind of house was it?
It was a rental. I own 3 houses in Texas.
Oh, well, that's a horse of a different color. All right. If before moving here, did you sell it while you were a resident or a non-resident?
No, I sold it while I was a resident here.
Oh, well, we need to talk to you, boy. Why don't you call us on Monday at 632-7886 so we can tell you exactly how much of that's going to be taxable to you, okay?
Chris, Tiffany, or Esther will sit down
All right.
and do a rendition for the man in Texas.
And
For the man in Texas. You should better wear your Stetson at the time.
632-7886.
We ran out of time,
Tiffany.
Tiffany.
Yes.
We ran out of time.
And
I'm Esther Gulius, the tax lady. If you need us during the week, egtax.com, 632-7886. We'll see you next Saturday with your Obamacare questions. Have a great week. God bless. Bye-bye.